Okay, folks, welcome to Thursday Night Stock Charts Live. This is Bob Desmond, and what we're going to talk about tonight, weekly charts. We're also going to talk about economic data and why this market appears to want to go down. And we'll talk about the Federal Reserve's balance sheet. We'll see whether or not the sell-off in stocks is really warranted. We'll talk about the bear market that really began back in Q1 of 2021, if you could believe it. And now you're just seeing the impact on the mega cap names. So we're going to go over the chart of the ARK fund. DWAC, the Trump stock, ripping today. Microsoft, we're going to talk about Microsoft as one of our top shorts. So let's get to it. What's going on is something that we kind of anticipated going into the new year. I mentioned several times to members, and I mentioned it Sunday Night Stock Charts Live. We were going into the new trading year with our largest cash position in a long, long time. And we're going to look to take advantage of some opportunities out there. And frankly, we already have started. NVIDIA. We expected NVIDIA to pull back. It has pulled back. We've been selling deep out of the money naked calls. We booked profits on one round of call selling yesterday. We have on our second round, we're up 58% on one tranche, and the other, which is what, the 530 strike, I think we're down like $100 on that. But overall, we're doing very well with our naked call positions, and we're about even on our naked put positions when you balance out the money that we made on the calls. And this is what you call a strangle. This is a strategy that we're using, cash flow strategy. There's a link below to explain a video that'll teach you all about strangles and what we do here. So we're doing well. We did get hit today on our naked put trade of Nugget. So we're probably going to have to roll that trade or take the shares in tomorrow. I doubt we're going to do that. Probably just going to roll that trade out and open up a strangle going out into next week. So today was good in some ways, bad in the other. But the reason why stocks are selling off is because of fear from the Federal Reserve. U.S. stocks erase all of 2022 gains as rate hike expectations soar. Frankly, I don't think there's any change from what they were the final week of last year. So I think this is a little bit hyperbolic. But what is the reason for the Federal Reserve's wanting to raise rates? Inflation, right? So let's look at some commodities and see whether or not the jawboning is having any impact. Coffee, no impact. Coffee's going up higher. Cal-Maine Foods, of which we own, egg company. We're up nearly 5% on the year so far on eggs, and this is going up higher. DBA, food prices in general. We're down in the month, but this is a continuation breakout pattern. There's no fear on the part of agriculture that the Federal Reserve is going to raise rates. Why? Even if they were going to raise rates tomorrow by a 0.5 percentage point, they are so far behind the curve on raising rates, so far behind on fighting inflation, that it just doesn't mean much. And all they're doing right now is, take a look at that Fed balance sheet, is they're throwing less gasoline on the fire. This is the Federal Reserve's balance sheet. This is as of yesterday. Their balance sheet continues to grow. They're not reducing the size of their balance sheet. They're not raising rates. So this here is all hyperbolic. Don't listen to what they say. Watch what they do. So this is an interesting article, but this is no shock to us. Massive meltdown. As a matter of fact, let's go to some comments here. I didn't say hello. Luis, Your daughter was on earlier. Shari was on earlier. Said hello to her. She said hello as well. Danny, Happy New Year, brother. Abel, Happy New Year. RL, Happy Thursday to you, my friend. Franklin, hello. Just saw Harry Dent is predicting 90% drop this year on Kitco. On gold, what's he predicting 90% drop? He's a bear on gold. Pre-drag, hey brother. Good to see you. Okay. So massive meltdown on the market. Could be right. It could be right. I think you're going to need a geopolitical event, though. I don't think the Federal Reserve in and of itself is going to do it. I think that there are plenty of needles out there looking to find a balloon to pop. And if you take a look at, here's the headline: massive meltdown. 40% of all Nasdaq companies are down more than half from their highs. This is true. This is true. Take a look at the ARK Fund. The ARK Fund peaked out back in February of 2021, nearly a year now. And look at how far it's fallen. So, yeah, no doubt, this fund is going to fall further. These are your high beta tech stocks, very, very reliant upon cheap money. And God forbid they see a hiccup in cheap money. There's a big problem for these companies. And add to that, the economy's slowing. This is not a vibrant economy. It's an economy that's built on cheap money. And the minute that it goes away, so does the economy. So that's why these high beta names are getting hammered right now. You may see a rally back by the end of the year, but right now they're in a bear market. Now, what you see now, I've spoken about Microsoft many, many times. And what you're seeing now are the mega cap. This is Microsoft on a weekly basis. Microsoft had a failed breakout last week. It is now flirting with a clear breakdown below support. So now Microsoft is under a tremendous amount of pressure. And if you take a look at a daily chart of Microsoft, take a look at this. I warned about this last night with members on Market Wrap. Here's your lower high. And now today we broke down to new lower lows. So what you have with Microsoft is now a stock that has gone from an uptrend, going from your lower left of your screen to your upper right, to now one that's going from your upper right to the lower upper left of your screen to the lower right of your screen. This is not the direction that you want to see Microsoft going in. Now, do I think it's going to be a straight drop down from here? No, I do not. You have earnings coming up. It's silly season. They're going to try to keep Microsoft propped up, just as what they're doing with NVIDIA. At least they tried to at NVIDIA today. We have a trade on here. NVIDIA is in all sorts of trouble. Yeah, it was an update today, but take a look at your Stokes. Losing momentum dramatically. So in this environment, we really want to try to take a step back from the daily charts and take a look at your weekly charts and your monthly charts and see what they're telling you. NVIDIA was hot money for a long while. Now it's petering out. Do you think that it's time now to go buying this dip? No. I think that we're going to probably pull back a lot further from here. And I love the company. So NVIDIA is in a bit of trouble. All of these high beta tech names are in trouble. If you have cash, do this, pat yourself on the back, and sit, watch, and wait. There'll be opportunities out there. And if you have the capital, try to sell premium, generate cash flow until the time is right to go buying stocks. That's what we're doing. Joseph, hey, brother. Good evening to you. Folks, sorry, my throat is still bad from COVID, so I apologize. Happy New Year, Seymour. Okay, let's take a look at the weekly charts. Before we do that, let's take a look at the economic data. ISM manufacturing came in with a miss. Quits beat over the prior month. Job openings contracted. ADP employment report, big beat. Big beat. FOMC minutes, we know what happened there. Initial jobs claims inched up versus last month. ISM services index beat. Factory orders, slight miss. Tomorrow, the pimp Mac Daddy of them all, non-farm payrolls. Keep an eye on average hourly earnings. If you see this miss, I know this sounds crazy. If you see this miss, expect stocks to rally. Being an American patriot, you want to see the next guy make an extra buck, do well. It's the American dream. But unfortunately, on Wall Street, they don't want to see that. That's inflationary. But if you see average hourly earnings coming with a miss, you may see a rally in equities. Let's go to the charts. So here's the main problem, the main culprit of why you're seeing equities under a lot of pressure. And before I go into these charts, it's Thursday. We have one trading day left to go. A lot can happen here. This is just our cursory view of how we are looking to close out the week and how we are planning on positioning for next week. But a lot can happen between now and Saturday when we re-review these charts with members. So the 10-year yield, this is the problem out there, folks. Have no doubt about it. This is what's got the market spooked, and yields are moving up higher. They haven't broken out yet, but they're very, very close. We have an inverted head and shoulders set up, left shoulder, head, right shoulder. You have a neckline at 1.80. Now think about it. You have inflation is measured by the CPI at 6%. This is why this makes no sense. 6%, and that's not even a real number. The real number is in the teens, but we'll play their game. Are you going to invest for 10 years your money in a U.S. Treasury bond and get paid 1.8% when inflation is raging and you're really getting paid a negative number? It doesn't make sense. So in no way is the Federal Reserve fighting inflation right now. I was around in the 70s, well, not that I was trading, I was a kid, but I remember the 70s, early 80s, and what they had to do to get inflation under control. They went to war, jacking up interest rates, not playing namby-pamby games of we're going to taper. No, they didn't need to taper because they weren't buying debt. They were jacking up rates hand over fist. We're nowhere near there yet. So 10-year yield jacking up higher because the Federal Reserve is supposedly going to maybe at some point in time raise rates once, twice, maybe. It's ridiculous. The TLT, 20-year bond ETF, broke support so far this week. One trading day left to go. Maybe we'll rally back. But take a look at this head and shoulders setup. Left shoulder, head, right shoulder. We're breaking the neckline, folks. So this is for real. Big volume. Daily chart. Bullish reversal bar on the day. We may rally tomorrow. I don't think it's going to last. The tips, Treasury inflation protected securities, down over 2% on the week. It's a huge move for the tips. And we are going to weaken up further here. Take a look at your Stokes. Down below 50 now. This is very bearish. Big volume. Avoid the tips. Daily chart. They're trying to hold support. Stokes a week. We may pop, but I think any rally fades. Beware, folks. Look at the volume. Rise sequentially. The US dollar breaking out. One trading day left to go. Breaking out on the week. Remember, last week we broke down below support. Let's go to a daily chart. It's a pretty bullish chart. It's a pretty bullish chart. So it looks as though the dollar is going to move up higher from here. And the other thing to keep in mind, folks, is that, you know, Powell just barely kept his job. If I were him, I would have said, you know what, let me get out of Dodge before this whole thing blows up, and they'll blame it on the next guy who takes over. But he wants the job. So to keep his job, he's got to make sure that this stock market stays up into the midterm elections. So I don't think for a second that right now we're going to have, unless he completely loses control, they're going to allow yields to rise dramatically from here because the stock market's dead. They're going to have to sacrifice the US dollar. So it's going to be interesting to see how this plays out. But he's got to understand right here, right now, that if he does jack up rates into the summer, stock market goes down and the dollar goes higher. Now, if he pauses on those rate hikes, the stock market goes higher, the dollar goes lower. I think he's going to have to choose the latter. The VIX, weekly chart. Reversal bar. We were talking about the daily chart on the VIX. I was warning members. I said, listen, beware of these Stokes. They're oversold. They're going to hook up. Sure enough, they have. And we're back up into the 20s again. Actually, no, we dropped down below 20, 19. On the VIX. So it looks as though we're consolidating here and that we could very well head up higher with stocks moving down lower. The Dow Transports, weekly chart. Now, the transports are kind of misleading in a way. We broke out last week above resistance, a very bullish setup. But take note of your RSI. RSI is not validating the breakout. It's actually rolling over. Volume, very light this week. Stokes are hooking up. That's looking good. We began to notice that last week. That's why I put that arrow up to memorialize it. Daily chart. Light volume today. Up day. Stokes look good. MACD doesn't look good. Tomorrow's going to be a critical day. It's going to be a critical day for the transports. Take note of your RSI, lower highs, lower lows. The Dow Jones Industrial Average, new all-time highs this week, but they couldn't hold it. Bearish key reversal bar so far on the week, down over a quarter percentage point on volume. Daily chart. Breakout point failure, continuation breakdown today on volume. MACD losing momentum. Dow Jones is in trouble. And if the Dow Jones goes, expect your transports to follow suit. S&P 500 weekly chart down nearly 1.5%. Let's get our crayon out here. Memorialize what's going on. Forget that. Here's your lower highs. Volume's going to roll in about average. So the S&P 500 coming under a lot of pressure here. Daily chart. We have a breakout point failure or a bear trap, bull trap. I still have a little bit of the COVID fog. So here is your breakout point. We broke out. Right here. The 23rd of December. Rallied, stalled, failure. We failed yesterday on volume. So, we kind of anticipated that some shenanigans would take place this week. Initially, they made it appear as though the markets are going to move up higher. That was a test, and now they're pulling the rug out from underneath traders. So right now, the name of the game, folks, we're very expensive. Remember on Sunday Night Stock Charts Live, I went over the valuation of the market. The Buffett indicator, extremely overvalued, and we had the Shiller PE ratio above 40. So this is a very expensive market. So you're going to get some great, great bargains coming up. As a matter of fact, I was looking at, what was I looking at earlier today? It'll come to me in a minute. Wasn't Twilio? Was it Adobe? It was Adobe was getting whacked. ADB. Look at Adobe. I don't think this is a stock I was thinking about. It was a smaller cap stock. But Adobe is just getting absolutely annihilated. Take a look at this. Weekly chart. A bloodbath. This stock is down 9 1/3% on the week alone. So just when you think they can't go lower, they can go lower. So, the adage I'm going to leave you with is that today's lows could be tomorrow's highs. Today's lows could be tomorrow's highs. So wait for your stochastics to become very oversold. We're getting there in Adobe, but we could still go down a lot further. We are probably going to go down here another 50 points or so down to where the support level is. So we want to wait for our support levels to get hit. We want to wait for these stokes to become oversold. Then we'll go shopping on a weekly and monthly time frame. Forget about the daily chart. Small caps. Talent. You called it, Bob. Oh, I mean, correction. Thank you. It's good to get acknowledged. Thank you. Lewis, crowd move today. Crowd. We trade crowd for earnings. A lot of damage done here. What was it up on the day? Yeah, I wouldn't buy this. This is a perfect example of why you get these one-day rips. You don't want to get lured in. Here, let's go to the saved chart here. I like to memorialize these charts and do a look back. CrowdStrike, where is it? Here we go. So where you had support back here in December, support back here, support back here, support back here is now resistance. We really want to get into the habit during this sell-off of watching the weekly chart. Does it seem as though that this stock is done going down? I would argue no. I think that what's happening here is that we're setting up for a continuation move lower, because this is a bear flag setup. And we broke that support level this week. Now, yeah, we had that one-day rip today, but it's not enough, because the macro view, remember, if we want to be successful in this business, which we are, we don't want to be looking at 15-minute daily charts, anything like that. We want to take a step back, say, okay, what's the macro view? Are we putting in higher lows and higher highs? No, we're not. We're putting in lower highs and lower lows. It's not time to buy yet. There will be a time, not right yet, right? Not right now. Okay, back to the small caps. Weekly chart, reversal bar. Volume is probably going to come in about average. Let's go to a daily chart. An update today, spinning top formation. Good volume. Your Stokes are rolling over here. RSI, very weak. I wouldn't buy it. I would avoid. I just don't think it's time to start buying the market yet. I think what we're looking to do here is looking for a counter trend rally and then shorting into that rally. That's what we're looking to do. The cues. This is a monthly chart. Take note of what we're doing here in the monthly chart. We're rolling over. Lower highs. Ultimate oscillator rolling over. MACD is probably going to go negative this month or next. Weekly chart. Here's your, I wouldn't call this a double top per se, but it is a lower high. We haven't broken down yet. Big volume so far in the week. But when this goes, if we do put in this lower high and we break below and close down below 378.42, you're going to see the algorithms. They're just going to start selling. They're going to start selling. Because now your path of least resistance has changed. You were putting in higher lows and higher highs. So what? You have a lower high right now, but as long as you hold support, all is right with the world. It's simply a consolidation. But if you break to new lower lows, that's a problem. Daily chart. Stokes are weak and getting weaker. For those folks that aren't really familiar with Stokes, You just hear about them and you see two squiggly lines. It's not just two squiggly lines. It's what do those squiggly lines mean? What do they mean to me? Why have they a value to me? Is it extreme oversold, extreme overbought conditions that make them valuable to me? No, that's the overly simplistic view. You don't want these two lines declining, especially trading down below the 50 mark, because rallies tend to fade. Rallies tend to fade. So understand them from what they are. They're momentum indicators. It's simple as that. And momentum is going in the wrong direction. What happened today? And I warned members of this last night. I said, listen, I was asked, what do you think is going to happen tomorrow? Because the market was closing horribly yesterday. I said, they're probably going to rally it and it's probably going to fade. Sure enough, what did they do today? They rallied it. What are they doing to the close? They faded it. Get used to it. Don't be shocked tomorrow you're waking up after me talking all bearish tonight and the futures are up bright green. That is not a bottom. I don't recall one time where I've woken up after a correction and the futures are bright green. It was off to all new highs. And this really hasn't even been a correction, to be honest with you. You'll know when the market is done going down, when you get an absolute washout. You wake up, futures are triple digit down, ugly as all hell. You're ready to throw in the towel. That's probably a capitulation day. We're not there yet. We're nowhere near it. Now, the banks, I've been pounding the table on the banks, and we're long of the banks because the banks like when yields go higher. So the banks are doing awesome so far this year. And we're going to be looking to buy more banks. I'm just worried about the rest of the S&P 500 rolling over. If that happens, it's going to be hard for the banks to rally as an individual sector all alone. Daily chart. Beautiful day today. Bullish key reversal bar. Gotta love it. Volume is good. Jeff, what are your feelings on inverse trading ETFs? By the way, I really like you draw your trend lines on these indicators. Thank you very much. I like inverse. I think. All right. So inverse ETFs are misunderstood, and you can't use them as an investment vehicle. If you're going to use them as an investment vehicle, it's not good because you have time decay. Basically, an inverse ETF is a derivative of a derivative that reprices every single day. If you're going to use them for short-term trading, or you're going to use them to sell premium on to generate cash flow, I'm good. If you're going to use them to purely short the markets, I kind of have a bit of a problem with that, unless, of course, you're going to sell covered calls. You're going to sell premium against it to offset that time decay. Otherwise, I like them. I think there's a lot of value to them. Momo. Talon, like TBT. Yeah, TBT. That's the inverse of the bond fund, right? Inverse of TLT, 20-year bond ETF. I don't know if this is, it is an ultra fund. So yeah, it's an ultra fund. So this is probably 2 times, I guess. Ultra short. So I like these vehicles. You just need to be educated on what you're buying and how long you want to hold it for. You really have to have an exit strategy or a way to manage that time decay. And the way I like to manage it, because I love inverse ETFs. I use I like leveraged ETFs, Nugget, NUGT, but I sell premium against it. So I really don't care about the time decay. Technology. Brutal. Look at this. RSI downtrend. We haven't broken price, but this is not pretty. Stokes rolling over. Volume, it's going to come in about average. MACD went negative this week. Daily chart. Note where we closed today. I think what they're going to do is they're going to probably rally this market tomorrow. They'll probably do a short covering Friday. But again, these Stokes are going in the wrong direction. Rallies tend to fade. So maybe they'll close it up tomorrow. That's fine. Do they close it at the highs? If they don't, my guess is that they'll probably try to spike it again on Monday and then fade it. So just be very, very careful. What do we got, a spammer here? Dude, what are you doing? If you can explain that, let me know and I won't block it, but I can't have that stuff. So watch for a bounce tomorrow on the XLK. Volume is pretty heavy here. The semis. If these go, I mean, this is really the shining star of the market. Now, to be fair, the semis are holding up fairly well. We broke out last week. This week, as far as I'm concerned, we're doing a retest of a breakout point. Basically, what was resistance from the week of the November the 15th through to the week of December the 20th is now support. So maybe we'll rally back tomorrow for all I know. Stokes look good, but what I don't like is the RSI. This is a bearish divergence. We broke out on price, yet RSI is putting in lower highs and lower lows. In short, it should be validating the breakout on the semiconductor sector, but it's not. That is what concerns me. This is the market sending us a signal. We can ignore it. We can ignore it, but it's not wise to do. This is why we focus on the weekly charts and monthly charts to get that broad overview of the battlefield. We are in a war, right? For those that want to day trade and they're gonna pick the bottom here, well, spend time on a 15-minute chart or even a daily chart. In a sell-off, you're gonna get wiped out. You got to take a step back, take a deep breath, look at your weekly charts. What are they telling you? Consider your weekly charts and your monthly charts like a smoothing mechanism. All right, dude, I'm going to block you. I got another one here. The only reason why I know this is spam, guys, because they spam my comments after I log off. It's the same crap they always put out. Okay. Okay. So the semis, it's going to be an interesting day tomorrow. Daily chart. Reversal bar off the 50-day moving average. We held this breakout point. God damn it. Dude, what are you doing to me here? We held the breakout point. We reversed to recapture. So they may spike the Semis tomorrow. But just beware of these Stokes. Don't chase it. Don't chase these rallies. They want you to. They're going to have people on CNBC, especially on Monday mornings. You're going to have merger Mondays. You're going to have upgrade Tuesdays. Don't listen to these guys. Wait for your weekly stochastics. Wait for Thursday and Sunday nights when we go live and we'll talk about the weekly charts. Okay. Then we'll know when the bottoms are in. LABU. I can't believe we're down in the 20s. These are your biotechs, folks, and this is going lower. I think we're going down to 25. Look at the volume here. Institutional distribution. This is bananas. Stokes rolling over. Daily chart. Horrible. Big volume. Avoid. You know, you could have looked at this chart and said, wow, it's time to buy. Look at this. Great setup. And yeah, we broke out. What do? Failed. What were your Stokes doing back then on that breakout? They were declining. Rallies tend to fade. Consumer discretionaries, man. Bearish engulfing bar. RSI, wrong direction. Stokes are rising, shockingly enough. Big volume. Daily chart. Big volume. Holding support here. Hard to make a call here. I don't think that we hold. We'll consolidate here, but I think ultimately we're going to break if yields rise. Energy. Another bright spot on the week here. Banks, energy. Energy up 9%. Why? Fears of inflation. Energy prices are going up higher. Look at the volume. Great stuff. This is where money's going. Banks, energy. Natural gas up 6% this week. Bullish key reversal bar. I'm going to look to sell naked puts here. That's a bullish bet. Volume, very heavy. Good stuff. This is where the money's floating, folks. Let's wait for this negative crossover to go into the rearview mirror before we get involved with nat gas. Oil, weekly chart, up over 4.5%. What's not to like? Daily chart. A little bit of fill topping action. We may pull back here. Nearing all-time highs. Not all-time highs. Nearing recent highs. Volume light. Stokes look good. RSI looks good. Good stuff. Emerging markets. Stuck in the mud. With yields in the dollar rising, I don't like this space. Avoid. Avoid until the dollar breaks. Oh, gold. Okay. So gold last week or last month broke out. Monthly breakout. What's it doing this month? Retesting the breakout point, I hope. Gold is under some pressure this month. You don't want to see this roll over. We're breaking out on Ultimate Oscillator. Let's go to a weekly chart. Brutal. One trading day left to go. But this is a brutal setup. If we close at the lows of the week, we will probably head lower next week. We're at critical support right now. Daily chart. Oh, this is the gold bugs. It's the wrong chart. Dummy. Daily chart. Broke support on big volume. Big volume. All right. Let's take a look at Ethereum. All right. So one of the plays that I like going into the new year is Ethereum. I'm learning a little bit more about it. It has a lot of exposure to NFTs and the metaverse. It's like the building blocks of the metaverse. So if there's one crypto I'm looking to get involved with, it is Ethereum. Now is not the time. I think it's probably going to head lower. So we'll take a look at it from a weekly perspective. And it's a mess. Here are our support levels. 2677. That's probably where it's going. You have a minor one here, 3000. For an extreme oversold trade, around 1700. I know a lot of people out there screaming at me right now. No way, 1700. Yeah, way. Yeah, way. Totally possible. Bitcoin. Head and shoulders set up. Left shoulder, head, right shoulder. Here's the neckline. We're right there. Stokes are very weak. Volume light. Daily chart. Looks like we're going to pop here. But that pop will probably fade just as it did back here. Beware Bitcoin, beware Ethereum longer term. All right, let's do some chart requests. I got to log in. I didn't get my members' requests. Oh, where's my... All right. Take a cloud. Where is you? Curve. Jeff with Curve. Okay. Let's see what we got in the chat box. DWAC, you got it. NRGU. SIVB. All right, let's do this. Okay. First one up is Curve. Torrid Holdings. Not a lot of data here. Well, this must be a SPAC, right? Hold on. Are you busting my chops? Curve plus size women clothing, COVID pound trade. Is this a joke? Now I have to look that up. All right. It's not a joke. It is. It's a real deal. All right. All right. So Jeff is giving us an explanation here. All right. I'm confused now. I'm going to reread it. Curve plus size women COVID pounds trade. All right. Now you got me. He's not lying. Apparel retail. All right. I thought it was a SPAC. All right. All right. So let's do it. There's not a lot of data here. So we don't have a new monthly low, which is good, but it's very, very early in the month. As a matter of fact, we're up on the month. Value of the automated trend line. Take it off, put it on. Oh, by the way, we're using TrendSpider, automated technical analysis, 35% discount code below. Check it out. All right. It's looking interesting. I want to see what the short interest is. I like it. You have about 3 million shares short. You're trading over 500,000 shares per day. You have a multi-day short squeeze potential here. Quarterly revenue growth is good. It's got cash. Where's the debt? A lot of debt. But you have a short squeeze potential here on Curve. Daily chart. I think it's a buy. I think you can buy it, use a stop loss right below the lows of December the 20th, and get out. Add more on a rally up and through this resistance level. And there you have it. Alert is set. So you could nibble here, add more on a breakout, and you're good to go. Buy on strength. I like it. Multi-day short squeeze potential. DWAC. All right, DWAC, we own it. You're welcome, Jeff. Great day today. Now, what was the news? They're expecting to launch Truth Social in February. That's pretty much it. So I don't think that there's necessarily a major rush to go chasing it tomorrow. Allow for a pullback. If you're looking to buy some, watch 54.66 per share. And if that fails to hold, watch for a retrace of the breakout point and a retest of about $52 per share on DWAC. Stokes are looking good. The weekly chart's looking good. But one trading day left to go. We don't know whether or not today's rally is going to hold. All right, so nibble, nibble, nibble. That's exactly what we did. We nibbled, 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 and we're managing our risk very, very carefully with this stock. I personally believe, I've been saying this, I think it's a $100 stock, but it's pure speculation. So be very, very careful. I think it goes up higher. Stokes are rising. We did rally and closed up and into the third standard deviation Bollinger Band. Expect a pause here. Allow it to pull back, then buy the pullback. NRGU. Microsectors, big oil. Ooh, this is nice. I like this. Microsectors US Big Oil Index. We're breaking out. Monthly chart. Weekly view. Wow. So here's the value of the automated trend lines, folks. Click of a button. You have resistance right up here at around 230 per share. But I'm loving the higher lows. I think this is going up higher. It's going up higher. Daily chart, a bit extended here, but again, it'll pause, it'll pull back, then the rally is going to resume. It's going up higher. I like it longer term. Short term, a bit frothy. Longer term, I like it. SIVB. Bonnie Bean. Sure, Bonnie. Happy New Year. Hey, NY Jets. I missed the occasional snowstorm when I lived in Suffolk County. Yo, we're going to get hit tomorrow. You're better off in Florida, believe me. SIVB. Wow. The financials are just in fuego. Monthly chart, continuation breakout. Weekly chart, continuation breakout. Daily chart is going up higher. At SIVB, love it. It's a buy. ARKG. All right, the thing to keep in mind with a lot of Kathy Wood's funds, Kathy Woods is the manager of the ARK funds. There's a lot of overlap between her funds. So just be aware of that. And this appears to want to go lower. Looks like we have some support at 55.19. We broke support this week. We're down on the week on volume. Stokes are going in the wrong direction. They're rolling over. You got to see them hook up. Let's go to a daily chart. This CTF looks a lot further along in its corrective phase than the ARKK fund. It is. Watch watch $51, $52 per share as support. Look at these Stokes rolling over here. God damn it. It's ugly. I would avoid right now, Bonnie. I would avoid it. I think it goes lower. You don't want to catch this falling knife. You know, it looked like a halfway decent setup a couple of weeks ago because you bottomed out, rallied, right? And at that point in time, you're saying, okay, great. Maybe what we'll do is we'll pull back, we'll look for a higher low, like right here. Right there. But what did we do this week? We broke it. And we broke down below the lows of the week of December the 6th. So that's a confirmation breakdown. So what that's telling you is that the market's sending these signals, right? It's saying, okay, we're oversold here. We're going to rally. We're going to now pull back. Let's see whether or not the selling is done. Do we have enough buyers to overwhelm sellers? Can new buyers absorb the amount of excess liquidity that's going to come onto the market? The answer is a resounding no. The market spoke. This is going lower. So just be very careful here. And with that, folks, thanks for joining in. Please smash the like button, subscribe to the channel, and everybody have a profitable trading day tomorrow and a great weekend. I'll talk to you soon. Be well.